Investing in gold and silver has long been considered a prudent strategy for preserving wealth. These precious metals have historically served as hedges against inflation, allowing investors to maintain their buying power even as the value of fiat currencies fluctuates. However, while the allure of stacking gold and silver is undeniable, it's crucial for investors to have a well-thought-out exit strategy in place. Failing to do so can lead to unforeseen challenges and pitfalls when it comes time to sell. One of the primary reasons why an exit strategy is essential when dealing with gold and silver is the inherent volatility of the precious metals market. While gold and silver tend to track inflation over the long term, their prices can experience significant fluctuations in the short term. If the value of bullion suddenly surges beyond the rate of inflation, it can create a situation where bullion dealers may be unwilling to buy back the metals at a fair price. In such cases, investors could find themselves holding on to a substantial amount of metal with few buyers in sight. This scenario is not merely hypothetical. History is replete with instances where bullion dealers closed their doors during periods of rapid price appreciation, leaving investors stranded with assets they couldn't easily liquidate. Without a well-planned exit strategy, investors may struggle to sell their gold and silver at favorable prices, potentially eroding the returns they had hoped to achieve. Moreover, other pitfalls can arise when it comes time to sell precious metals. Storage and security issues may become more pronounced as investors accumulate larger quantities of gold and silver. Transportation logistics can also present challenges, particularly if investors need to move significant amounts of bullion to complete a sale. Additionally, the tax implications of selling precious metals can vary depending on jurisdiction, further complicating the process for unwary investors. Despite these challenges, having an exit strategy in place can help investors navigate the complexities of the precious metals market with confidence. A well-defined plan should consider factors such as market conditions, tax implications, storage options, and potential buyers. Diversifying one's holdings beyond physical bullion, such as investing in gold and silver ETFs or mining stocks, can provide additional liquidity and flexibility when it's time to sell. Furthermore, staying informed about macroeconomic trends and geopolitical developments can help investors anticipate changes in the precious metals market and adjust their strategies accordingly. Building relationships with reputable bullion dealers and staying abreast of their buying policies can also ensure a smoother selling process when the time comes. In conclusion, while stacking gold and silver can be an effective means of preserving wealth, it's imperative for investors to have a well-thought-out exit strategy in place. By proactively addressing potential challenges and pitfalls, investors can maximize their returns and protect their investments in the dynamic and often unpredictable world of precious metals. With careful planning and diligence, navigating the exit process can be a rewarding experience for those who have wisely stacked their gold and silver. Thank you for watching this very important video. Be sure to like this video and please subscribe to the channel to help us grow. Bonus joke. Why did the investor bring a map when planning their gold and silver stacking exit strategy? Because they heard it was the best way to navigate the bullion market. Ha 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 ha, okay, that joke sucked.